Okay, everyone, what I wanted to do for today's class is, no, there's no assignment or there's no reading, but what I wanted to do is I wanted to review the quiz for chapter 17 and 19. Okay? Now, most everyone did really well on the multiple choice questions. However, some people did okay or not so good for the calculating our tax losses and tax payable and receivable for the year. So I just wanted to start with how we would calculate this. So let's look at 2015. So in 2015, we had pre-tax earnings of $100,000. Our tax rate, okay, in this case is 10%. As a result, how much tax payable are we going to have for 2015? Well, 100,000 times 10%, that's $10,000. Debit income tax expense, credit income tax payable. Okay. Now 2016 comes along. We have earnings of 140,000. Tax rate's 10%. 140 times 10%. That's income tax expense of $14,000. 2017 comes along. I don't know what happened in 2017, but we lost 200,000. Okay, stop. We lost $200,000. As a result, we can go back up to 3 years to get a refund. Well, 2014 doesn't exist, so we can only go back up 2 years. So notice $200,000. We had 2 years accumulated earnings of 240. Okay? So we're going to get a refund of $200,000 worth of tax paid in the prior years. Okay? So as a result, we'll get back 20,000 bucks. We also got to be aware of, we're going to have a loss carry forward of, in this case here, 200,000. Okay, so we're going to get back to 20,000 so far. We're not going to carry forward anything, but we've used it up. So now we're going to go into 2018. (2018) comes along. We have a loss of 280,000. This is where it can get tricky. What's our refund going to be? Well, we can go back 3 years. 1, 2, 3. So look here. We have 240, which is this plus this. Those are gains. So as a result, what's happening here? We can use 40,000. We can get back $40,000 of tax, so that would be 4,000 bucks. Now we don't have any loss carrybacks to use. So what will happen now is we can carry forward $240,000 of losses. Okay, so notice in 2018, again, we go back 3 years. So in 2017, we went back 2 years, and we got all the tax that we paid. We paid on 200,000. We got that back, 20,000 bucks. Then in 2018, well, we can only go back claim $40,000 worth of losses, okay, to get that tax refunded. So again, what's going to happen? Well, let's compare 2019 now. 2019, we have an income of $60,000. Tax rate is 10%. What's the tax payable going to be? 0. Why 0? Well, because we had a loss carry forward of $240,000. So that's any income that we have is going to be shielded. So we have a remaining loss carry forward now of 180. Now for 2020, what's happening? We make 90,000. 10% tax, again, 0%. Why? Because we want to use our losses. So we have 90,000 left. Okay, the shields from income. Now in the last year, 2021, we have net income of 300,000. So how much tax are we going to pay? Well, we're going to use up the remaining 90. And our tax is going to be paid on 210,000. So as a result, we'll pay $21,000 tax in our final year. So that's key to be able to track, okay, going back and going forward. So our tax carrybacks and our tax carry forwards. Okay? So again, if you can do this example, there should be no problem on the exam. Compare that to your answer and let me know if you have any questions.